Hey there, crypto traders. Welcome back to the Coinigy technical analysis tutorials. In this video, I want to go over how to spot a trend and how to spot a reversal, specifically using candlestick patterns. Now, I'm also going to talk about basic head and shoulder patterns as well that you can implement in your own trading to locate more profitable crypto trades. So let's first talk about the trend. What is the trend? Well, there are three kinds of trends. There's an uptrend, there's a downtrend, and there's a sideways trend. And the key to technical analysis really is identifying what type of trend we're in and then riding the trend. And so the easiest way to think about an uptrend is a security price, whether it be a stock or a forex or a crypto, that's moving up in price. It's showing higher highs than previous, and it's also showing higher lows than previously before. So it means that the market for the security is moving higher than it has in the past, and when it does pull back, because nothing moves in a straight line obviously, it holds a higher low. So take a look at this chart of Bitcoin versus the US dollar. You'll notice in the top left, this is the price on the GDAX exchange, and that is the exchange that's associated with Coinbase. And you can see on this chart that there are a lot more green candles than there are red candles. And on top of that, the green candles are bigger than the red candles. And that's the first thing to tell that you're in an uptrend, is that the price simply is moving up. And another thing that I like to look at that helps me determine how strong the trend is how quickly the counter trend moves get reversed. So you can see in this chart of Bitcoin, we had a couple counter trend sell-offs. That means the price was going up, but then a couple red candles appeared. And it didn't take too long before the sell-offs were basically erased. Specifically, most recently, if you look at the price action in May, it's really just been straight up since 5,500. There have been very shallow pullbacks. They are erased just after a couple days' time. You can see there was a shallow pullback here on May 20th, where the price went from 8,000 down to 7,500, and then the price reversed itself and went higher. And when you see the price constantly breaking out of the ranges it sets for itself, that indicates that there are buyers willing to pay higher prices than previously, and that's indicative of a very strong uptrend. And what we most recently saw was we had a pullback to about the $7,500 price level, and then within a few days, because there was no follow through to the selling, everyone who had been betting that Bitcoin was reversing suddenly got caught on the wrong side of the trade, and so the price moved up very quickly and then set itself into a new range. Now, another simple way to evaluate the price trend is by using a moving average, or using two different moving averages and see how they relate to one another. And these are really easy to add to Coinigy charts. You simply just go to this tab right here that says indicators, click on it, and then search for moving averages. Now, I like to use two different moving averages. I use a 20-day and a 50-day. So if you click on moving average twice, you'll see how you added two different moving averages. Then you have to customize these. So click on this little wheel here, and I'm going to start with a 20-day moving average, and then my style is going to be, let's use light blue, and you want to make this visible, so you're going to need to make this line a little bit larger than it is when it sets as a default. So that's set as a 20-period moving average. Now I also want to use the 50-day moving average because I want to see how these two relate to one another. So the length on this one's going to be a 50-day moving average. And let's make this the color pink. Set it the same width as the other one so I can see it. And now you can see two different moving averages. The blue line is the 20-period moving average. The pink line is the 50-period moving average. In this case, the period we're looking at are 1 day period. If you change the time frame here to, let's say, 5 minutes, the moving averages that you drew will change along with it. This is the 50-period moving average, which is 50 times 5 minutes, or 20-period moving average, 20 times 5 minutes. But let's go back to the 1 day so I can show you how I use these. Now, The way you want to use moving averages is by looking at when they cross over. And when the 20 period crosses over the 50-day period, it's considered a trend change. And we had a trend change here specifically back in February. And I'm going to zoom in on this so you can see. So back in February, the 20-day moving average crossed over the 50-day moving average. And this is a buy signal, because it means the trend changed the upside. And it happened when the price of Bitcoin spiked from about 3,600 all the way up to 4,000. And then price pulled back, but the moving averages had crossed over. And once this trend started, it continued all the way up to where we are currently. So this is one way to look at the trend and to see when the trend has actually changed, when the price of the 20-day moving average crosses over the 50-day moving average. And so that's how I use moving averages in evaluating whether or not I should buy or sell a crypto. And if you want to see more videos like this, check out Coinigy.com and the Coinigy channel on YouTube.